Hello, Accounting One. Today we are going to launch course here. You should be logged in to your MindTap. We're going to go into Chapter 2, and we're going to do 2-3. This will finish up the Chapter 2 for us. So Part 1 of the book, down arrow at Chapter 2. Scroll down to where you see Lesson 2-3, and click on the down arrow right below that says End of Lesson Review. Come down to Working Papers 2-3, and this is in your book on page 49. Now, this whole section of 2-3, each page of that will show you how to do each transaction. All right? Promise you, it shows you how to do each transaction. So we go in here, and the tab, this is Work Together. Again, it's on page 49. And your tabs here, one shows your account titles. And these are the only accounts that this company, Jensen Cleaning Services, these are the only accounts that they use. All right, so these are the only ones that we have to choose from. The other tab, Transactions, tells you what happened. So we have 5 transactions here from March 11th to March 19th that we have to make T-charts for. Just as a reminder, I want to remind you that DC Adler is in our toolbox. It is a tool for us to use to be able to remember all of these. This shows us which accounts are debit accounts and which accounts are credit accounts, meaning that the debit accounts, I call them debit accounts because they increase on the debit side. Credit accounts increase on the credit side. Now you know where they increase. They decrease on the opposite side. They decrease on the opposite side. All right? DC means debit credit, and debit credits always equal. Always, always. Under debit, you have assets, drawing, and expenses. Assets, the drawing account, and expenses. These all increase on the debit side. They will decrease on the credit side. Accounts receivable goes with assets. On the credit side, you've got liabilities, you've got owner's equity, which will be paid back to the owner. You have revenue. Revenue is incoming money, and right now we call it sales. It's incoming money. But right now, the only incoming money that we have is from sales. Liabilities are those things that you owe. You have to pay somebody back. We call that an account payable. We have to pay somebody back. So DC Adler shows you where these types of accounts increase. The opposite side is where they decrease. You've got to remember that. And that's why we practice this. All right, so first transaction for March 11th says sold services on account to Johan Eriksson, $125. Lucky for you, sold services on account. There's no cash involved here. Johan Eriksson saying, I'll pay you within 30 days. You're waiting to receive this $125. He gave you a promise. Now, we know that $125 has to go on the debit side and it has to go on the credit side. So we can fill the dollar amounts in. Now we got to figure out which one goes where, which accounts. Lucky for you, the system gives you only 4 choices for the debit account. You've got accounts payable, Johan. You got accounts receivable, Johan. You've got cash and you got supplies. Now, right off the bat, I want you to recognize that this says sold services on account. Johann did not pay you, so it cannot be cash. Nothing, it says nothing about supplies, so it cannot be supplies. So now we're down to, is it accounts payable, Johann, or is it accounts receivable, Johann? Well, he owes you $125. You're waiting to receive that. That makes it a receivable. It's a receivable. It's worth $125. It's considered an asset. Now, the other side, you have these to choose from. The credit side, you have these to choose from. And it says accounts payable, Johann Eriksson. Well, we don't have to pay him anything, so that can't be it. It says cash. Cash was not used in this transaction. Go back and look at it. It doesn't say anything about cash. John Jensen, capital. No, it doesn't say anything about John Jensen, capital, but it does say sales. I want you to recognize that sold is the past tense of sale. Sold is the past tense of sale. Throw some English in here, right? Also, over here on your DC Adler, the R is revenue. When it increases on the credit side. That's another reason why we have to put sales, and it goes on the credit side because sales is increasing. The next transaction, March 13th, received cash from sales, $260. Now we have to figure out what two accounts are being impacted with this transaction. First, I see cash. Second, I see sales. Those are the two accounts, and it's $260. $260. $260. Now I got to decide which one is debit, which one is credit. We said cash and we said sales. Well, I know right here from my last transaction, sales, when they increase on the credit side. Sales increase on the credit side. So that has to be credit. The other one has to be the debit. Cash is an asset. You own it and it has value. It increases on the debit side. Okay? Hope that's okay. The 14th, paid cash for the telephone bill, $54. We got to figure out what two accounts are being impacted. Well, first of all, we know cash. And cash, it says paid. So in this case, cash is not increasing. Cash is decreasing by $54. Decreasing by $54. Cash. Here we have $54 and we have to figure out what goes in this spot. Our options are accounts payable, Supply Depot. Well, this transaction says nothing about Supply Depot. It says paid cash for the telephone bill. So it can't be that one. John Jensen drawing. The drawing account is when the owner takes money out of the business to use it for his personal life. This says that this went to the phone bill. So it can't be drawing. Rent expense, it says nothing about rent. Phone is a utility. So it goes under utilities. Expense. And if you notice over here with DC Adler, expenses increase on the debit side. They increase on the debit side. That's what this shows. And cash is an asset, but when it's going away, when it's decreasing, you have to put it on the credit side. So that makes sense. Then we go to March 16th. Received cash. We like that. We like receiving cash. And it's on account from Johan Eriksson. So remember this first one up here on the 11th? We sold services to Johan for $125, and he said, with the on account thing, he said, I'll pay you later. Well, later is now on the 16th. Received cash. Cash is an asset. Cash is increasing because it says received. Cash is increasing. So I have to put cash under debit. And it says 125. So now I got to figure out what's going to go in the other one. Well, it says that Johan paid us what he owed us from this very first transaction up here. So you see how this is accounts receivable, Johan Eriksson, and it's a debit? Well, that's when he was increasing that account. Now he's decreasing it by 125. So this time we have to use the same account, but we have to put it on the other side, and it will cancel it out. So we come down here, and it's a receivable. Johan's paying on that debt that he owed us. So cash went up, and his accounts receivable went down. He paid us, Johan paid us now all that he owed us. So now he has a zero balance with us. He's paid us in full. And that's a really good customer to pay in full. He paid what he owed you. Now we go to March 19th. Paid cash to owner for a withdrawal of equity, $200. Paid cash. So that tells me right there my cash is going down, is decreasing. Cash is an asset that increases on the debit side, but when it decreases on the credit side. Cash is decreasing. So the other one has to be the debit. And this is the first time we've seen this. The owner is withdrawing, just like you withdraw money from the bank, withdrawing money from his business to use for his own personal use, whatever reason. All right. So this is when we're using this drawing account. And you see that drawing increases on the debit side. So we go down here and we put John Jensen drawing. And then that's it. You check your answers. It says up here 20 of 20. We've got green checks. All right. Now save and continue. Don't forget your DC Adler, folks. I'm telling you, we're going to see it. You're going to use it all year long. And T-charts you're going to use all year long. Now you can go on to On Your Own, and you can get it done yourself because I just showed you how to, and you got your book. All right. Until next time, stay safe and stay well. I'll see you.